This is the January Southeast Michigan market update, and the information or the momentum of the market in December and going into January was probably the pattern that we've seen through most of the fall and early winter, in that listing inventory is rising, the number of sales are holding pretty steady, and the appreciation rate is settling back down. And I guess if you were to take a look at going back to 2014 in general, sort of as a summary of what happened for that year, and generally it started off slow, then really fast, and then settled back to medium. And the real test for the second half of 2014 and 2015 is, what does the market look like under normal, unsubsidized, uninfluenced by financial issues situation. And that prior to really halfway through 2013 and 14, the market was heavily influenced by the financial crisis, either with lots of inventory, with lots of pent-up demand being released from being held back for a number of years, and also subsidized interest rates, with the government buying bonds to keep interest rates low. And that has all gone away. That pent-up demand is still there to a certain degree, and we expect to see some of that in 2015 yet to be released, but a chunk of it's been released. And interest rates now are really market-based interest rates. They're not subsidized interest rates as much as they were before. So we're seeing a market that is reacting to the normal circumstances of the economy. And in that, we're seeing that sellers seeing the values are rising. So more and more sellers are putting their homes on the market, which is a good thing. Their equities are rising, so they're able to do that. And we expect this spring that should bring some buyers out of the woodwork. Buyers, particularly in the under $250,000 segment, who kind of stepped on the sidelines for a while because last year they just couldn't find homes for sale. There just weren't enough of them. So I think we'll see a little bit of a spurt of activity this spring. And I think this winter will probably look much better than last winter, just because the weather's better. People will be able to get out and sell houses. So we'll see year-over-year comparisons that will look very strong. But that's a little bit deceiving. The market probably won't be quite as wild as those stats show, but still we're going to be with a pretty healthy market. If you break up the market into pieces, the under $250,000 market is the strongest with the biggest deficit of inventory, where you've got buyers chasing a few listings, and that'll continue into next year, but probably releasing just a little bit. There's about 3 months worth of inventory in that price range under 250. It might rise to 4 months, but clearly it will stay in a seller's market. The 250 to 500 range, if you divide it into sort of 3 different segments, in that middle range, inventories are about 6 months supply. And for that, you'll see the market kind of very steady. Home values will rise maybe in the 3 to 4% range, and you'll see that it's more of a balanced supply and demand. And in the over $500,000 market, the market always is a little bit schizophrenic because there just aren't that many transactions. That's right now it's staying at about 11 months inventory. So you'll see there homes that are well priced, good location, that are in good condition, upgrades. They'll sell quickly, sell in months, but then you'll have a pretty good sized segment that'll take a year or more to sell. So that segment is a little more delicate in marketing and pricing, and will continue to be that way going into this year. So overall, we think if you look at what the economists are saying about what's to expect this year, they expect that across the country, this will be a stronger real estate year than 2014, with homes values rising 3 to 4%, and number of homes sold actually rising as well. We think in Southeast Michigan we're maybe a little more conservative, and the good news is that if we're wrong, we're going to be wrong on the positive side. We'll be pleasantly surprised. But we think that the number of homes sold will probably continue the same settling it did in 2014, maybe 3% or so fewer transactions. But values rising overall 3 to 4%, maybe as high as 5%. Higher percentage in the lower end, a little lower percentage in the upper end, but in general that's sort of the average. So it'll be a good, healthy market. We're going into the year with a much stronger economy than we did in the last year, and even last year was not a bad economy. So all the indicators point to, at least for 2015 and carrying into 2016, we hope,